Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Chinyi Good Night Watch, Wednesday, February 4th. I'm analyst Zhang Jida. Remember those 3 characters and don't forget to like, subscribe, and share for us. Of course, if you have any investment questions, feel free to leave a comment. If I don't get a chance to answer today, I'll make sure to reply to everyone in tomorrow's class. As usual, I'll also be answering questions from students about individual stocks that were asked yesterday. Good evening, everyone. Yesterday was the 16th day of the 12th lunar month, which happened to be the year-end company banquet. So what festival is today? Today, in terms of the Chinese solar terms, is the first of the 24 solar terms. It's called Lichun, or the beginning of spring. So what should we pay attention to during Lichun? What should we eat? What are the customs? I'll be sharing some related facts and traditions with everyone in a bit. Good evening, everyone. Good evening. Yesterday we ate guabao, and today we're having spring rolls. There's a reason for that. Online we have Hui Juan, good evening. Mei, Dai Ti, good evening as well. And Yulinge, hello, hello. And also Flying Fish, Anaya, and Franklin. Good evening to you all. Good evening, good evening. I think I've greeted everyone, right? Oh, and also good evening to the staff members. All right, okay, let's first take a look at today's investment highlights, and later on, I'll find some time to share the story of spring rolls with everyone. So first up, regarding the Federal Reserve, Trump's favorite dove, Lisa Cook, her nickname is Milan. So what did Milan do today? She announced that she would step down from her role as chair of the White House Council of Economic Advisors and instead become a full-time member of the Federal Reserve Board, continuing her tenure there. So what impact does this move have on monetary policy? And what does it mean for Trump, who wants to extend his invisible hand, his black hand, deeper into the Federal Reserve? Today, we'll be discussing these related topics with everyone. So will Milan actually become a full-time member or not? And what kind of impact will this have on the new chair? Also, watch the US-Iran situation, a key gray rhino. If it suddenly charges, markets may not react in time. What negotiations are underway between them? You really need to pay special attention to the overall profit risks and the potential impact on oil prices. In addition, regarding industry earnings reports, let me give everyone a quick update. Right now, as for the US stock market, 4th quarter earnings are being released one after another, and more than half of the companies have already reported. So are the earnings generally better than expected, or is the situation different? Today, I'll be giving everyone a comprehensive summary of each industry and company. Also, regarding Intel, what's going on with Intel? Why do people say it's challenging its main backers, its rich dad? And who exactly is this rich dad? It's actually challenging Nvidia's position. Today, Intel CEO Pat Gelsinger specifically mentioned that they're planning to develop GPU and AI chips in the future. Will they be able to pull it off? If they succeed, what kind of impact will that have on their rich dad, which is Nvidia? This is something you really need to watch out for. All right, before we get into the economic data, let me just say, good evening, everyone. You save it, you save it. Hello, and this too. It's 8:35. Hello. Before today's economic data, let me explain why we eat spring rolls on the first day of spring. Quick trivia, if you haven't had any yet, there's still time to get some. It's 9, but you can still find some to eat. Yesterday, we talked about how every year on the 16th day of the 12th lunar month, people eat weiya, right? For weiya, you have to eat guabao. We mentioned that the shape of guabao looks like a tiger's mouth with pork inside, so it's called tiger bites pig. In Taiwanese, it sounds like good fortune, and the act of biting means holding on to good luck, so it's called fortune bites pig. That's why during weiya, you eat guabao or sometimes rumbing for this reason. And today just happens to be the first of the 24 solar terms in the Chinese calendar. Every year, it's the very first solar term. It usually falls between February 3rd and February 5th on the Gregorian calendar, and this period is called Lichun, or the beginning of spring. So what does Lichun mean? Lichun signifies that winter is over and spring is starting to unfold. The cold days are behind us, and from Lichun onward, the weather will gradually get better and warmer. Alright, so during Lichun, there are generally 3 things people can do. The first is called Yao Chun, or biting into spring. What does biting into spring mean? It means eating spring rolls. As you know, there are spring rolls, but in different regions, whether in the south or the north, the name for spring rolls can vary. In some places in the south, they call it something else. Down south, runbing is called chenghuan, though names vary by region for the same dish. Fried versions are simply called fried spring rolls. So why eat them during Lichun? Basically, it means that you wrap up a lot of things together. Then, on the day of Lichun, you eat this spring. What does that represent? It means everything is renewed. A brand new year is starting again. So, Yao Chun, biting into spring, means you're holding on to spring. That's why on the day of Lichun, you eat spring rolls. That's the reason. Besides biting into spring and eating spring rolls, what else is there? Take a walk through the village today or tomorrow while the weather's nice. It'll turn cold again soon, so be careful this weekend. Also, look out for the unique beating the spring ox tradition. What's beating the spring ox? Linked to the beginning of spring, this ancient Chinese custom stems from our agricultural roots. Since oxen were vital for plowing, people performed this ritual to pray for a good harvest during the spring season. Whether it was the government or the common people, they would use clay to make an ox out of earth. Then, inside this clay ox, they would stuff it with various grains, fill it with grains and cereals. After that, they would whip the ox and sometimes even break it apart, letting the grains spill out. What does that symbolize? It means wishing for a bountiful harvest for everyone. The more you break open, the more grains and cereals pour out, symbolizing a plentiful harvest. Also, making this ox out of clay has another meaning. It represents driving away the cold. That's why during the first of the 24 solar terms, which is the beginning of spring, there are customs like biting the spring, walking the spring, and beating the spring ox. That's the reason behind these traditions. So, for example, if you managed to eat guabao yesterday, that was for the year-end celebration. But today, on the beginning of spring, remember to eat spring rolls, which symbolize a fresh start and good luck for the new year. So I wanted to share this with everyone. Just wanted to share a little. Yesterday was guabao. Today it's spring rolls, right? All right. Good night. And who's this? Dina. Human. Good evening. Good evening. And yes, that's it. So let's get to know a bit about spring rolls. Now tonight there are some important economic data releases. At 9:15 later, there will be the U.S. January ADP employment numbers. The previous figure was 41,000 and the forecast is 48,000. Now, why is this data a bit more important today? It's because, as you know, the U.S. government said a few days ago that it was shut down for 4 days. Although the funding has now been allocated and it's confirmed that the government is back open since Trump has already signed the bill into law, so regardless of whether it's the Senate or the House, the related appropriations bill has already come through. But the bigger issue now is that even though the funds have been allocated, it's still too late. It won't make it in time for this Friday. The Bureau of Statistics is supposed to release the relevant non-farm payroll and unemployment rate figures. So if things still can't be sorted out by this Friday, then the private sector's ABP non-farm report becomes relatively more important. So at 9:15, I'll walk everyone through this data. The previous value and the forecast are both around 41,000 to 48,000. Of course, if it stays below 48,000, it means the overall job market is still relatively weak. If the job market is weak, of course, that favors the Fed continuing to cut interest rates. But if tonight the number suddenly jumps to over 50 or 60,000, then to some extent, it tells everyone that the job market isn't as pessimistic as the market thought. In that case, the urgency or likelihood of rate cuts won't be as high or as important. That could be the situation. It might really be that we have to wait until after Powell steps down, and only in the second half of the year will there be 1 or 2 rate cuts actually implemented. Okay, good evening to Jeff Lynn, and good evening to 6P as well. All right, let's take a look. Besides the ADP, there's another thing. U.S. January S&P Global Services PMI drops at 10:45 p.m. Previous and forecast are both 52.5. Above 50 signals expansion, so no major concerns. And what about the ISM, the Institute for Supply Management, for January? The ISM non-manufacturing PMI will be released at 11 p.m. The previous figure was 53.8 and the forecast is 53.5. These two data points are relatively important because in the US, when we talk about their industrial structure, the service sector actually makes up a larger proportion than manufacturing, about 60% to 70%. So when we look at the PMI data, the service sector PMI is often more significant as a reference compared to manufacturing. So for this data, keep an eye on it at 10:45 p.m. and 11 o'clock p.m. and just note down the expected values and the previous values. If both of them stay above 50, it means the economy is still expanding and hasn't slipped into recession. Basically, that's what it indicates. At this stage, the established fact is that, as we can see, whether it's the data from this January or from the past November and December, like CPI, PPI, PMI, and even GDP, all these figures are telling us that the US economy is doing just fine. The economy keeps growing, and the S&P 500 index and so on. Every quarter, the growth estimates just keep going up. So the economy is fine, and at most, the job market is just cooling off a bit. Under these circumstances, if the Fed gradually and slowly cuts interest rates to support the job market, it would actually be a pretty healthy move. In fact, it's healthier because the economy isn't slowing down due to a recession. Rates aren't dropping due to a major recession, but because the economy is actually doing great. The job market is just a bit lukewarm. In this situation, gradually lowering rates will stabilize the economy, capital, and the stock market. All right, next, let me answer this student's question. Yesterday, during the May Day live stream, everyone was so polite. Cheng, Patrick, PA, hello. Okay, so the question is, why did AMD stock drop before the market opened? Got it. Okay, someone asked about AMD, so I'll talk about their earnings in a bit. Today, we'll discuss AMD. Their earnings report wasn't bad at all. In fact, it was really good. But there was just a tiny issue that created a gap between market expectations and reality. I'll explain more about that in a moment. All right, let me first answer the question from yesterday. Cheng, are you and Caesar online? They asked about the trends for Micron, SanDisk, and OKLOL. Okay, let's briefly talk about these stocks. Micron, SanDisk, and also WDC, which is Western Digital. What's it called? Seagate Technology or Western Digital. Okay, these three companies are all involved in memory-related products. Some make HBM, some are heavily into NAND flash, and some focus on hard drives. Micron, SanDisk, and WDC are all similar in this regard. These companies are all related to memory and have been surging nonstop. So how should you look at these companies now? If you're holding their stocks, should you keep holding or even add more? Let me put it simply for everyone. Their fundamentals currently don't have any major issues. In the memory sector, whether it's hard drives, HBM, or NAND flash, everything is in short supply and everyone's scrambling to get them. This buying frenzy will probably keep building throughout this year and maybe even into next year. We should still be able to see this trend continuing into 2027 as long as AI keeps booming. Whether it's DDR4, DDR5, HBM3, HBM4, or even NAND flash and so on, all these high-speed memory products are in demand, and prices across the board are going up. Prices are rising in the first quarter and again in the second quarter. It looks like the price hikes will keep going. Since there's demand driving up prices, naturally, as demand increases, stock prices and revenue will go up too. So how should we look at Micron and SanDisk? It's simple. Today, I'll just add one more thing. A blue moving average line. This is the 10-day moving average. What does this 10-day line represent? It's a very short-term support level. As long as it's Micron, and this is Micron by the way, yesterday Micron almost reached $420. Just remember, as long as this blue moving average, the 10-day line, isn't broken, you can keep holding your position for now. But if you're really aggressive, if you're the type who wants to buy these high-flying stocks, just remember, wait for a pullback to the 10-day line, then you can buy in gradually. Don't go all in. You might say, wow, teacher, if you're super bullish on Micron and want to leverage up, don't. It's too risky. For memory stocks, use the 10-day moving average as support. Trim your position if it breaks that line. If it doesn't, wait for a dip back to the 10-day to buy. Stick to that range. Micron dropped about 4.19% yesterday, but you'll notice it's still holding above the 10-day moving average. Since it hasn't broken below the 10-day line, the short-term bullish trend isn't over yet. As for SanDisk, which we mentioned earlier, it went up 4.55% yesterday. It's a globally well-known supplier of flash memory. Similarly, its 10-day moving average, the blue line, hasn't been broken either, and it keeps hitting new highs, reaching over $695 yesterday. It's pretty crazy. It's gone up more than 7 or 8 times. It just keeps rising. Always stick into that 10-day moving average. Hold if this blue support line holds and wait for a 10-day average pullback. Aggressive buyers can clear positions and enter now. Lastly, OKL, which Chen mentioned yesterday. It rose 5.95% yesterday. However, the chart shows it crashed from $200 to $80, losing over half its value. So why did it drop so hard? Of course, it's because there are some fundamental issues, and there are some doubts about the industry's development. As for OKL, let me briefly introduce this company. It's a startup focused on nuclear fission technology and nuclear fuel recycling. It focuses on developing next-generation small modular nuclear reactors, a new technology. Looking back, I realized those with a physics or chemistry background might understand it more, using terms like intermediate fission and intermediate reactivity. Anyway, there are a lot of things like that which, since we're not experts, we might not fully understand. All we can say is that Oklo is focused on this SNR, the small modular nuclear reactor, which is considered a new technology. And with new technology, it naturally comes with higher investment risk. It's high risk. By high risk, we mean that if this new technology develops well and matures, then in this industry, in the field of small nuclear reactors, these SNRs, it could really boost their competitiveness, or what we call their competitive edge. The moat would be quite wide, but since it's still in the startup phase and hasn't been established yet, it means they'll have to burn through more cash. At the same time, the boundaries of their moat aren't as stable as those of more mature companies. So it's basically a high risk, high speculation company, but that also means its volatility will be very high. Alright, and then something a bit special is that previously, Meta had some collaborations with them in terms of electricity. Also, OpenAI CEO Sam Altman, well, Sam Altman was actually a chairman at Oklo before, just to clarify, but he isn't anymore. He used to be the chairman and was also an early investor in this company, so he has some connections to both Meta and OpenAI, and to AI in general to some extent. But overall, even though there are some effects, we can only say that this is basically a dream-based valuation concept. At the moment, with this dream-based valuation idea, if you look at the stock price trend, it's currently showing more of a descending broadening pattern, a kind of downward expanding formation. In this pattern, you can see the downward pressure and the supporting line below. It keeps moving downward. In other words, if the stock price really reaches this red circle area, you can get a rough idea of the price just by looking at the screen. If the stock price gets to this red circle area and manages to hold there, then there's a chance it could rebound. There's a path forward, there's a chance for a rebound, but as for when it can actually shift from a downward trend to a gradual recovery, from a bearish phase to an upward move, the first condition is that it absolutely has to hold at this red circle area. Besides holding there, if it wants to push higher, it must break through the resistance at this neckline. This neckline resistance has been in place from last October to this January. It's hit that point about 3 times or so, and every time it touches it, it drops back down, again and again, without fail. So just remember, if you really want to buy Oklo, in the short term, it's still relatively weak, since after all, it's a high-risk industry sector. In the short term, it's still relatively weak. The support below is at the red circle I marked. If it can hold at that red circle, then there's a chance for a rebound after the drop. But if you want it to really recover, like I mentioned earlier, it needs to get back above this blue resistance line. That would be more favorable for its future development. So today, I just wanted to briefly add a bit and answer the questions from students in the group. Some students asked about Micron, SanDisk, and OKL, about the future developments of these 3 companies. All right, good night to Zhang as well. And to Louis Yang, good evening, good evening. Someone asked, teacher, will the non-farm payroll data be released this Friday? As of now, it looks like it won't be released. It seems that the U.S. Bureau of Labor Statistics has said that it still won't be released this Friday, but who knows what could change? Maybe they say it won't be released, but then suddenly they tell you that because the funds are in place and the government is able to operate in time, it will actually be released on Friday. We really don't know. Anyway, let's just wait and see on Friday. Whether it's released or not, I actually think it doesn't matter that much. We'll just give everyone a simple preview of the expected and actual values. As for whether it's released or not, we'll just wait for the U.S. Department of Labor to make the announcement. If the data isn't released, I think it's still fine. The impact on the market isn't really that significant. Like I mentioned to everyone yesterday, even if the released data turns out to be somewhat negative or shows signs of cooling off, it just tells us that the job market is heading toward a weaker phase. But to say that our weakness will lead to the collapse or recession of the US economy from now on, that's not necessarily the case. So there's no need for everyone to be overly pessimistic. Whether this data is released or not, it doesn't seem like it's absolutely essential to watch right now. Yes, it's important, but not to an extreme degree. But does the government shutdown in the US, which prevents the data from being released, mean that Friday's market will have no direction at all? Not necessarily, because there are still plenty of other things in the market to use as reference. For example, at 9:15, which has already passed, the ADP employment report. Let's take a look at that first. Although the ADP employment data doesn't always move in the same direction as the official US Department of Labor numbers, sometimes the ADP report is weaker, but the official non-farm payrolls turn out stronger, so they're not always aligned. Just because the ADP is good doesn't mean the non-farm payrolls will be good too. Still, it's something you can use for reference. So let's take a look at the recent ADP numbers. The data that was just released dropped sharply to 22,000, which is lower than expected and also lower than the previous figure. 22,000 is almost cut in half. This means that, according to private sector statistics, the US job market is showing signs of weakness. It continues to be sluggish and weak, and this situation, in fact, is also favorable for the Federal Reserve to consider cutting interest rates. Yes, this supports a Fed rate cut. The latest ADP data shows just 22,000 new jobs, missing expectations and the prior reading. This is bullish for Fed cuts and further supports the move. So just for reference, if the non-farm payroll data isn't released this Friday, we'll have to rely on this data alone. It means that the US job market is currently weak, which is a positive for the Fed and gives them more momentum to cut rates. That's basically how you should interpret it. This explanation should be enough. Now, about those officials, let's take a look. Is it true that the Fed is really calling for 5 rate cuts? Oh, the Fed supposedly said they want to cut rates 5 times? I don't think I've heard anyone actually say that so far. Just take it with a grain of salt. But still, Trump's favorite, Milan Lee, did say he wants to cut rates 5 times. On average, if each cut is 0.25, then 4 or 5 cuts would mean a reduction of over 1%. Milan did say he wants to cut by more than 1%, but Waller didn't say that. Waller just said recently that he supports rate cuts. So don't worry too much. Don't think, wow, if Waller takes office, since he's more hawkish, the US stock market or Forex market will suffer, or the stock market will do badly, and the bond market too. Because maybe he doesn't really want to cut rates that much. So does that mean something bad will happen? Actually, no, that's not the case. It's true that Waller used to be more hawkish, he used to lean hawkish, but I still want to tell everyone right now, just think about it. Your boss will always look for employees who listen, right? That's just human nature. Only employees who listen will be promoted by the boss to higher positions to handle things the boss can control, right? If Waller used to be hawkish, then why would Trump still want to appoint him? That just means he and Waller have already reached some kind of understanding, which is why he's willing to recommend Waller. Isn't it the same as when the previous lady was appointed as the next Fed chair? Just a very simple, straightforward logic. Trump would absolutely never appoint a hawk to be the next Fed chair, right? Everyone knows that. He wants a dove, he wants rate cuts, so how could he possibly pick a hawkish candidate? Markets often overreact. People assume past hawks stay hawks in new roles, but that's not true. The boss wants someone obedient who listens. Why would he pick someone who won't? If he picks someone who doesn't listen, wouldn't that be just like Powell now? If it's going to be the same as Powell, then why bother replacing him? Just let Powell keep doing the job. You get what I mean, right? So as for the next Fed chair, I think he and Trump have probably reached a certain understanding. They'll be moving in the direction of rate cuts. It's just that even while heading toward rate cuts, he'll maintain a certain degree of independence. It depends on how he communicates with Trump, but I don't think there will be any major issues. The general direction will be toward rate cuts, but he'll still keep the necessary independence and communicate with the market as needed. After all, didn't we just talk about his background a couple of days ago? Right? He has a PhD in law from Harvard, and his background and political business connections are excellent. He married the daughter of the chairman of Estee Lauder, right? His father-in-law is the chairman of Estee Lauder, and that chairman has both argued with Trump and is also a good friend of his, as well as a major donor to the Republican Party. So with all this as the backdrop, do you really think there could be any big problems behind the scenes? No way. Even Trump wouldn't dare offend these major donors. Just remember that, and that's all there is to it. Once the House passes this, the US government keeps running as usual. This money lasts through September, so they likely won't mess things up before the election. They really shouldn't. But Powell was also appointed through a vote before, so we're still watching. Yeah, Chen mentioned this issue. Previously, Powell, we talked about 8 years ago, right? When Trump, who was it? Powell and Waller, those two. Back then, Trump was trying to decide which one to pick. In the end, they chose Powell. It was a toss-up. Once chosen, you're stuck for the next 4 to 8 years. Powell clashed with Trump by refusing his constant demands to cut rates. So, do you think this time with the new pick, we might see a repeat of what happened with Powell? Nobody knows, really. Nobody knows. Because with this kind of thing, before you actually take office, you're definitely going to get along well with your boss. If you get along well with your boss, that's the only way you'll be trusted with such an important role. But once you're given that responsibility, will you suddenly change your attitude? Or will it be because of some market pressures, financial pressures, stock market pressures, that you have to assert your own independence? I think I'll just keep watching and see how things develop. So honestly, there's no way to say for sure. It's really unpredictable. So don't assume the new pick will stay a hawk just because they were one before. That's not necessarily true. Trump wouldn't pick someone who disagrees with him, so that doesn't make sense. Now, regarding Fed Governor Milan, he said that for now, he'll continue serving as the chair of the Economic Advisory Council, and he'll also stay on as a Fed governor. So he'll remain in that position, just keep staying on, until when? Until the Senate confirms who the next governor will be. So as for who will actually take over, whether it'll be Lee See or someone else, we don't really care. Anyway, no matter who ends up taking Milan's spot, or even if Milan just keeps doing it, that's also possible. In any case, whether Milan stays on or someone new takes over Milan's position as governor, they'll all be dovish. Trump wants a Federal Reserve team he can control to ensure they cut interest rates, as cuts boost the economy and the stock market. Whether for voters or his own election, that's his main priority. It just makes things easier to handle. So as long as everyone understands this kind of logic and way of thinking, you'll realize that a lot of what Trump does actually has his own reasons and considerations behind it. It's not always like what the media or newspapers say, like, oh, because so-and-so came to power, so this or that happened, or questioning if Trump is just being erratic or if he's something else. Our memory is of failing. Come on, how could someone like that become president or, reach that kind of position? If you're someone who can run a family business, be a big boss, or even become, let's say, the leader of the most powerful country in the world, then honestly, your mind is way sharper than ours. At the very least, a lot more flexible. Their considerations and calculations are on another level. Let's say we're playing chess or Go. We might only be able to see 2 or 3 moves ahead, but those really smart or calculating people, they can see 5 or 6 moves ahead, maybe even more. So for us, we can only take it step by step and see what kind of setup they're leaving behind. As for the experimental period public holidays, they're still at 4.27, and the final rate is 3.16, so there hasn't been much change. As for the number of rate cuts, it's around 1.9 times. Maybe it's Zhuge Liang or Sima Yi. We'll find out in the future, so let's just wait and see. Sima Yi later usurped the throne, right? He established a new dynasty, didn't it? So is it still that Sima Yi? Will he end up taking out Trump, which would be a shame? I don't really think the bedroom could become Sima Yi either. Whether he'll be a strategist like Zhuge Liang, we don't know. Time will tell. Good night, SY6. The US dollar index fell 0.08%. As we said, the election gave the dollar a brief boost, but it remains relatively weak. As for geopolitical risks, let's quickly go over them together. The US Department of the Interior mentioned that 30 countries are interested in joining the US-led Critical Minerals Club. Through things like tax exemptions and so on, basically what Trump wants is to unite these 30 countries to form an alliance in the area of rare earths or critical minerals to counter China's control. Just a couple of days ago, on February 2nd, Trump also said he would continue this effort and set up a $12 billion so-called gold vault plan as a strategic reserve. This strategic reserve will include both government and private sector funds, totaling about $12 billion. Anyway, looking at the big picture, it's really just about wanting to counter China's dominance, control, and ownership in the rare earth sector. But if you ask whether there's a chance in the short term, I don't think there's much of an opportunity. Because if I remember correctly, right now, globally, China holds about 70% and 90% of the world's rare earth reserves and refining capacity. So do you think there's a big chance that these countries can band together and counter China in the short term? I don't think so. It's going to take some time, maybe 2 to 3 years or even 5 years for things to gradually change. It's possible that over time, China's dominance and even global dominance will get somewhat diluted. But if you're asking whether this can be resolved in 5 days or a week, I think that's impossible, absolutely impossible, because mining and refining rare earths takes a huge amount of effort and resources. This specialized, polluting field is avoided by most, but not China. Many nations rely on China's rare earths for high-tech, aerospace, weapons, and green energy. Who else can they turn to? They're all reliant on China right now. Take this news as it is. Just know these alliances want to join forces to counter China, but in the short term, it's impossible. Alright, as for geopolitical risks, I'd say there's a gray rhino here, and we need to be a bit careful about it. There's one thing. Louis Yang said, "I heard Musk might be going back to the White House." I don't know about that either, but I think it'd be better if he didn't go back to the White House. If he doesn't go back, it's better. If he does go back and gets involved in politics again, then Tesla's stock price might start dropping all over the place, because there would be too much uncertainty. If you get too close to policy, that's risky. If it's helpful, then of course the stock price will soar. Like before, when Trump had just won the election, didn't Tesla's stock price skyrocket? It shot up and kept rising for a whole month. But as soon as he and Trump don't get along, since both of them have such outspoken personalities, Elon Musk, is the richest person in the world, and he's also very smart. But he can't help it. He's also pretty extreme, you could say. He's quite stubborn, too. If you don't take his advice, or if your ideas don't align with his, he'll just go off like a cannon, firing away. You see, he even dared to take on President Trump, wasn't afraid to criticize him directly. And Trump himself is also a very outspoken person. He couldn't stand it, felt like he was losing face. So he fired back too, going off on Musk. So with these two, they rarely cooperate unless shared interests arise, like elections where common goals align. But when interests clash, they turn on each other, as we saw last year. Musk should stay out of politics. It would be simpler. Now, let's return to geopolitical risks and gray rhino events. The US military said it shot down an Iranian drone that was approaching their aircraft carrier, and then Iran claimed it sent out some speedboats to intercept an American cruise ship. Basically, it's just a lot of back and forth, with some sporadic skirmishes here and there. Anyway, this week the US and Iran are supposed to have some talks, supposedly in Turkey. Whether those talks go well or not, we really don't know. In any case, both the US and Iran seem to be prepared for whatever happens. They're prepping for war, so we must avoid conflict. Successful talks mean lower oil prices. But if things fail, and you see planes or missiles flying, or if Trump orders a sudden midnight strike, at that point, this gray rhino will go on a rampage, and once it does, there will be a lot of turmoil in the international stock and currency markets, and even the global economy. Now, will this turmoil really affect the US domestically? Not necessarily. It won't really affect the US domestically. Short term, people worry about volatility since markets are at record highs. Oil prices rose 0.7% today, driven by the downed drone and intercepted US tanker. ADP data is out. Watch tonight's services PMI. Tomorrow, focus on ECB and BOE rate decisions. Friday brings non-farm payrolls and unemployment. We'll track those then. Regarding AMD's earnings, their report was actually excellent. So why did the stock drop? Fourth quarter revenue hit $10.3 billion, beating expectations. Gross margin was 54%, and earnings per share reached $1.53, both very strong results. Data center revenue hit $5.4 billion, up nearly 40% year over year. Client and gaming also did well, with $3.9 billion in revenue and 37% growth. Strong numbers. In Q4, China sales of the NI308 alone brought in nearly $400 million. So if things are this good, why did the stock drop 8%? It's not just that good, he also said that the estimated revenue for the first quarter is $9.8 billion, which is better than market expectations. Now, here's the key point, and it comes up in what follows. Originally, he mentioned that in the fourth quarter, last year's fourth quarter, sales of the MI308 and NI308 in China were subject to Chinese regulations as well as US restrictions. The US government banned the export of AMD's 308 to China, and similarly, NVIDIA's H200 chips also can't be exported or sold to China. Rumors suggest restrictions might ease, but China isn't eager for a lift. They're just waiting, so if rules relax, China might decline anyway. China wants to develop its own domestic chips. Companies like Alibaba, Huawei, and Baidu are working on advancing AI, and they don't want to rely entirely on American chips. If their technology ends up being completely controlled, it wouldn't be good for China's own tech development. In the field of AI, if they depend entirely on the US, it would just turn into a situation where both sides are signing off on everything, meaning mutual dependence and restrictions. China needs American AI chips, and the US needs China's rare earth materials, cheap labor, and raw materials, so they end up being mutually dependent. That's why China doesn't want to rely completely on American high-tech and wants to develop its own capabilities. Here's the key point. In the fourth quarter of last year, China sold nearly 400 million yuan worth of NI308. But because of regulations, what did AMD say? They said that in the first quarter of this year, Q1, sales of the MI308 in China dropped to 100 million, from 400 million down to 100 million, which means a 75% decrease. The Chinese market shrank by 75% because you can't export the MI308 to China, so it's just 100 million, only 100 million. And then the total revenue was 9.8 billion, which is actually pretty good and better than market expectations. But some investors think that with AMD's development in AI and GPUs, things should be going extremely well. Everything should be as expected, all great. So why is the revenue outlook for the first quarter only 9.8 billion and not even higher? Some market investors were hoping it could reach $10 billion. So because of this, it shows that, first of all, the Chinese market is still under regulation. So what does this mean for AMD? For AMD, the revenue might not necessarily benefit, and it could even lose market share. This is the first issue. Second, everyone thinks that these GPU manufacturers keep saying things are going great, that AI is developing really well with the MI300, MI350, then MI400, and now they're planning to develop even higher-end chips like the MI455. If things are going so well, then why was your Q1 revenue only $9.8 billion? Why was it 9.98 billion? Why wasn't it over 10 billion? Unlike the fourth quarter, which was still 10.3 billion, it should be really good, right? So now everyone is demanding more and more, not just looking at whether you beat expectations, but hoping you'll score even higher above expectations. This kind of feeling, if we look back, is just like what I mentioned to everyone earlier. No matter if it's about answering questions or about Suji Thing's mom's tailgating, it's the same. If you were already doing well in class, always ranking at the top, like third or first place, a really good student, usually scoring 95 or even 100, that's already great. But then one day, suddenly, you get a 94 on a monthly exam. You used to average 98, but suddenly you score 94. So everyone starts wondering, why would you get a 94 this time? Did you skip after school tutoring, or did you start dating? Or maybe you played too many video games. Why was your average 98 before, but now it's only 94? But honestly, is 94 a bad score? Not at all. 94 could still be among the top 3, right? So why is it that the fourth quarter's revenue and the first quarter's outlook are both better than market expectations? Because it shows that they're still a good student. Their grades are still really, really good. It's just that they dropped a bit from 98 to 94. So the market is going to scrutinize and magnify this, especially when looking at AMD and these other former top students. People wonder why their grades slip by 2 points, and then they start holding them to even stricter standards, expecting even higher growth. But honestly, that's just being overly demanding. It's really asking too much. Now, looking at it from another angle, let's say today it's Intel. Intel usually doesn't even pass, right? They can't compete with NVIDIA, and they can't beat TSMC either. Their proprietary capabilities aren't great. Usually, they're just at 50 points, but now because they have a rich backer, NVIDIA, SoftBank, government funds, and even support from the US government, they suddenly jump from 50 or 60 points up to 65. So what does the market say? Wow, you're amazing! You went from 50 to 65 points. You've improved by 15 points. That's a 30% growth. So the market gives you a really high valuation, thinking your stock price could go from $50 to $100. This is how the market compares these companies, with all the talk about expectations being missed or exceeded, and the room for imagination that comes with it. That's the gap. AMD's report was actually very good, just not good enough. So why did it drop 1.69% yesterday, then another 7 or 8% in pre-market? That's just what happens. Looking at AMD again, since it fell 1.7% yesterday, watch this moving average neckline, as it might be tested today. Alright, so today it might come to test this neckline area. As long as it doesn't break below the short-term neckline support, there's not much to worry about. This neckline is also pretty close to the quarterly moving average. So if you happen to be holding AMD today, just keep an eye on this blue neckline to see if it can hold. If it can hold, then we can just treat this as a correction after a strong rally. And it hasn't turned bearish because its fundamentals are really solid. And it hasn't turned bearish, i.e. it also hasn't become a bubble. But you do need to pay close attention to this technical neckline. This technical neckline is extremely, extremely important. This neckline was where it previously formed what we call a triple bottom pattern, or something similar to a triple bottom, right at this neckline position. If it breaks below, the correction and consolidation will simply drag on. With the H200, the US is back in the conversation, and both sides are just blocking each other. Between various officials and trade blocks, it's a constant back and forth. AMD and Nvidia are in the same boat, just cycling through these issues. So we can actually see this happening. You know, when Nvidia released its financial report a while back, they said they no longer include revenue from China in their report. They just leave it out. Why? Because it doesn't really matter whether they include it or not. Including it might give them a boost, but leaving it out is fine too. They're just focusing on markets outside of China, and their growth is still really strong. So whether it's the H200 or AMD's MI308, the question is, will they really be able to make it? If they go back into China to sell again, I don't think it's that important anymore. It's just, we can only say it's a small market, just one of the smaller markets. If they manage to get in, sure, it helps, but if not, then so be it. If they don't get in, it just means China and the US will each develop on their own. As for AMD, which we just mentioned, let's also talk about Intel for a moment. It's the same situation for Intel. Intel wants to challenge the position of the big players. What are they challenging? Their CEO, Pat Gelsinger, said he hired a senior executive from Qualcomm named Eric, who will serve as the chief architect for GPU development. They're aiming to challenge NVIDIA's dominance in AI chips. Of course, there are some pros and cons if we analyze it with a SWOT analysis. You can just skim through the text part, but to put it simply, in the short term, I think based on Intel's technology and patents, it's probably not possible for them to challenge NVIDIA's position. It's also very difficult. Asking these customers to stop buying NVIDIA chips and completely abandon the whole CUDA ecosystem and then switch everything over to Intel, I think that's extremely, extremely hard because their switching costs and risks are too high. Intel's manufacturing and patents aren't as stable as TSMC's, with lower capacity and efficiency. To invest heavily in smooth GPU and CPU production and build this? If you want to do Foundry and then on top of that develop a new GPU to get into AI chip development again, maybe they're trying to grab a share of the AI chip market. That's understandable. But if you're asking whether this ambitious plan can really help Intel make a comeback in the short term, I don't think it'll happen that quickly. Not that quickly. And the level of challenge, it's just too difficult. An uphill battle. The bar is set way too high. Whether they can develop a GPU to compete with NVIDIA, it won't happen soon. But because it has three powerful backers, let's say the government, NVIDIA, and the US government, these three big backers do help its stock price and its future industry development. As for Intel's stock price, yesterday it actually went up a little, about 0.9%, staying above this red circle, which means it's still on an upward trend. So as long as this support line isn't broken again, I think the trend of higher highs will continue, at least for now. It still has or still possesses those qualities, right? So as long as this upward channel, the area marked by the red circle, isn't broken, there's no need to worry too much. But whether it can get even better, whether it can go from, let's say, ordinary to good, or even from beta to best, I think there's still a very, very long way to go. Let me give you a quick supplement about Intel's stock price and fundamentals, just so everyone understands. Chen Liwu, he wanted to develop GPUs, so he went ahead and did it. All right, finally, let's quickly spend a bit of time on this because there are a lot of things to add for everyone. This is about 2025. There's a lot of stuff in all the Q4 financial reports, so as for the written part, I'll only comment on a few of the more important stocks. If you don't have time to watch, just remember to catch the replay and slow it down, okay? All right, are you ready? Whether or not I mention the stocks you're holding, some are good, some are bad. If it's a bad company, everyone should pay a bit more attention. First, Micron is looking strong. Their Q4 and Q1 outlooks beat expectations. HBM is completely sold out through 2025, so by 2026, Micron should be performing very well. FedEx, which is Federal Express, and UPS both have pretty good outlooks too. Basically, there aren't any major issues. Consumer spending and package spending are both holding up well. Now, even though FedEx, well, UPS did mention that their cooperation with Amazon might decrease a bit. Low rates and partnerships help, but layoffs are coming. UPS and FedEx stocks are performing well. Nike faces inventory pressure. Margins fell 3%. Delta is a mixed bag. Despite record 2025 revenue, the 2026 outlook missed expectations. Major bank stocks like JP Morgan and Goldman Sachs saw mixed Q4 results, with revenue or profits often missing the mark. Despite this, banking executives remain generally optimistic about the positive outlook for 2026. As for Trump saying that credit card interest rates should all be capped at 10%, this will more or less create some concerns for companies that issue credit cards, or for financial stocks in general. Of course, we'll have to keep an eye on how this develops going forward. But overall, looking at the fourth quarter earnings, financial stocks had mixed results, though most of them were positive. The 2020 outlook remains positive. TSMC's earnings are strong, with advanced 2 nanometers, 3 nanometers, and 5 nanometers processes now accounting for 77% of revenue. Their 2026 capital expenditure has risen to between $52 and $56 billion, with 30% annual growth. These are key points to remember. If this is too fast, please check the replay for more details. What about Intel? After meeting past expectations, their Q1 outlook disappointed. Why? Poor capacity and yields. Despite high demand, they can't deliver, so they can't cash in. Missing out hurts your margins and revenue. Low capacity and yields make this a real problem, causing their Q1 outlook to miss expectations. As for United Health, they've seen the first annual forecast drop in 30 years. With the market still weak, don't chase it too hard. Boeing, however, is doing well after getting massive orders. Just follow Trump to make big money, with orders coming from the Middle East and globally despite the trade war. So in the fourth quarter, they delivered 160 aircraft, setting a new high since 2018, turning losses into profits, and achieving positive cash flow for 2 consecutive quarters. As for Texas Instruments, although their fourth quarter financial report fell short of expectations, but the Q1 outlook beats expectations. Why? They noted the industrial market is recovering, and data centers are very strong. Meta and Microsoft differ greatly. Meta's capital expenditure surged, reaching $115 to $135 billion this year, among the highest of the Big Seven. Q4 also saw many active users. As for the virtual division, I think that part will eventually be phased out. Meta's VR department has been losing money. Last year alone, they lost $2 billion, so this department might get axed. I work in AI. He said by 2026, VR losses could still hit $2 billion. Meta's problem is VR, but AI investment is growing. As for Microsoft, despite meeting Q1 expectations, their fourth quarter gross margin hit a 3-year low. That's why Microsoft stock has been tumbling to new lows lately. It's because the gross margin is dropping. That's the reason. The gross margin is dropping. Now, Tesla's also pretty interesting. In the fourth quarter, both Tesla's vehicle deliveries and its total annual deliveries declined. Year over year, there was an 8.6% drop for the whole year, almost a 10% decline. Interestingly, Q4 gross margin hit 20.1%. They say the Semi, Cybertruck, and Robotaxi enter production late this year. The third-gen Oppo robot debuts in Q1, which is basically now. By late 2026, they plan to build 1 million robots. If he wants to paint a rosy picture, let him dream. Will they really produce 1 million units by the end of this year? I think that's basically impossible. It's pretty much not going to happen, but he's just selling a dream, and I'm just showing you the dream he's painting. Also, the Model S and Model X factories are being converted to make robots, which means he wants to shift from just making electric cars to things like FSD, robots, and self-driving taxis. Anyway, it's a huge shift. A successful pivot means making it big. But if it fails and your cash flow can't keep up, future plans will fail. So be careful. Looking at Tesla's fourth quarter, annual deliveries declined as expected. IBM expects to launch a large-scale quantum computer by 2029. SML performed well with a positive first quarter outlook, simply following the trend. Looking at domestic and international markets, the concept is clear. Oracle shows no sign of stopping its decline. They've been constantly issuing more bonds, including a recent $25 billion announcement, and there's no end in sight. Their cash flow is weak, so don't touch it yet. Wait for the bottom on Oracle. For ASML, I follow TSMC. If semiconductors do well, orders keep coming and spending rises. ASML, the lithography maker, will grow right along with them. Each machine sells for 300 or 400 million US dollars. Yeah, each one goes for 300 or 400 million. Selling those to TSMC is pretty wild. Each machine is about the size of a bus, weighs around 2 tons, and costs about 400 million US dollars. Starbucks is a mixed bag. Interestingly, fourth quarter global and US same-store sales both grew 4%. This is noteworthy as their first positive growth in 8 quarters, which is why the stock has performed well lately. In Taiwan, Starbucks often has BOGO deals. If you see one, let me know. Apple's financials are also hitting record highs. The iPhone 17 is selling fast and everything's going well. In Greater China, they grew 38% year over year, and dividends increased. Keep an eye on Apple too. Its stock recently topped $270. It's also a very, very important tool for supporting the market, so you have to keep an eye on Apple. As for companies like MasterCard and American Express, their first and fourth quarter earnings were also in line with expectations, but you should still keep an eye on them. In the credit card sector, we must consider if interest rates or Trump's 10% rate caps might impact profits. Even though American Express says its 2025 revenue will grow 10% to a new high. As for 2026, it's also in line with expectations. Overall, things look pretty good as long as there's no impact from Trump. Lastly, a few companies, including Disney, have another round coming up. But as we mentioned yesterday, while their theme parks are profitable, the profit margins for their film and ESPN divisions have actually dropped by about 30% to 35%. That's something to watch out for. Plus, their CEO, Bob Iger, is stepping down at the end of the year, so that's something to keep in mind for Disney. The stock price has been pretty shaky over the past couple of days. As for Palantir, which is related to AI and big data, their outlook for the first quarter is also extremely optimistic compared to 2020, so the stock jumped 8% yesterday. Lastly, regarding AMD, as we just mentioned, their earnings report was great, but the level of performance just didn't quite meet investors' high expectations. It's like a student improving from an 80 to a 94, yet the stock still faced pre-market pressure. We've summarized all fourth quarter earnings released so far. Gathering this data requires daily updates and checking various reports. I don't even separate them by industry, covering everything from finance and chemicals to tech. We don't do that. I look at everything, updating daily and then uploading. If you can't check the numbers right away, you can always watch the replay later. Watch the replay for that. Finally, for US pre-market, Super Microcomputer, SMCI, run by Charles Liang, not Charles Schick, is the one with previous financial report concerns. SNC announced strong earnings before the bell, jumping 12% in pre-market. Whether you buy is up to you, but I'd avoid it due to financial report concerns. That's just my approach. If you're aggressive, you might jump in, but it depends on your style. That's a strong surge. Match Group rose 6.02% pre-market on an earnings beat. Biotech climbed 5.18%, and Conlon Company rose 2%. ABMB, Devon Energy, Enjing, and Baisheng also gained 1 to 2%. As for the companies that dropped, there's AMD. Yes, AMD from the tech sector. Their earnings report was somewhat below expectations, but honestly, I think those expectations were a bit too high. Anyway, AMD fell 8.64% in pre-market trading. Also, Chipotle Mexican Grill continued to drop, down another 6%. We've talked about this company's CEO before. Previously, their CEO left to become the current CEO of Starbucks. Back then, he led Chipotle to profitability, but after he jumped ship to Starbucks, Chipotle's stock price started to fall. So changing leadership really makes a big difference. For example, Texas Instruments also dropped between 2% and 3% in pre-market trading, along with SanDisk. Uber fell 1%. With today's volatility, expect larger swings. Watch your position management. Take profits at highs, and if longs hit the moving average, exit to buy lower. This applies to all stocks. In this plateau, remember to take profits on longs when prices are high, then buy the pullbacks. The Dow fell 1.34%, but holds above monthly and quarterly moving averages. Strong stock support keeps index performance decent. The Philly Semiconductor Index fell 2.07% yesterday. Watch that it stays above this rising wedge and blue line. If it holds, we're fine. Monthly and quarterly averages still look bullish, despite yesterday's larger drop. Now for the Magnificent Seven. This moving average line is fluctuating. Microsoft is weak, Meta is rebounding, and Amazon is correcting after a big move. Google remains strong, supporting the market. Apple's recent rise is propping things up, while Tesla trends downward. With Nvidia dropping yesterday, the overall picture seems to be only Google is really strong right now. Of the other 6 stocks, about 3 are falling and 3 are just moving sideways. So if you ask whether investing in the index is that great, it doesn't really seem like it can be that good at the moment. But even though Microsoft is relatively weak in the short term, honestly, looking to the future, the Magnificent Seven are still the leading players in their respective industries. If the index is going to make a strong comeback, these stocks are still a very important confidence indicator, and they definitely can't be left out going forward. It's just that in the short term, after such a big run-up, everyone has taken a bit of a pause to watch and wait. Alright, that's all for tonight's content. When class is over, remember to like, subscribe, and share for us. If you or your friends have any questions, feel free to leave me a comment. Finally, I wish everyone smooth trading, and I'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.